if you follow rules, definitely there is a actually there can be a possibility of making profits in markets. Then I realized, okay, if there is a process, there will be a progress. So obviously I need to find out this process. When I was working with Infosys, I lost 3 months of my salary in one day because of one single mistake. If you start waiting for the right time, it will never appear. Then I realized, okay, if there is a process, there will be a progress. So obviously I need to find out this process. But during the initial phase, no matter what we do, definitely we'll lose money, definitely we'll blow up account. So you don't need to become profitable today, tomorrow, or next month or next year. You just have to follow the process. Over the year, eventually, once you get used to the process, eventually the profit will follow.
Can you tell me, how does your day start these days, generally?
Normally it starts in the morning at 6 o'clock.
Oh, okay.
So 6 to 10 is my timing. I usually sleep at 10, so I wake up early. So 5:30 to 6 o'clock is the time that I wake up.
Okay.
And once I wake up, other than the morning chorus, I just go for a morning walk. Earlier, I used to go to gym in the morning.
Okay.
And evening, I used to go for a walk. Now I've completely changed it. Now, earlier in the morning, I go for a walk. And going to workouts, I just shifted in the evening. Because morning walk, when you're going that to around 7 o'clock to 8 o'clock, it is so calm. And that too, when you walk at least for 30 minutes without having a headset, it gives you a lot of ideas, like whatever things that you have read the previous day, be it a research article, be it a blog, or be it any investment books that you have read. Next day, when you are going for a walk for 30 minutes, you tend to process. Your brain is so fresh and it tend to process that information, and you get a lot of ideas. And once you come back, you feel lot more fresher, and you tend to work on those ideas. So my day starts just with the walking and all those morning routines, and then by 8 or 9 o'clock, I get started with the work. And mostly it would be like responding to any specific inquiries, email inquiries from vendors, or if there is any specific attention that I need to focus on for any specific clients, I just respond to that. And other than that, I don't monitor my trades specifically. I don't sit and do all those tradings, because everything gets switched on automatically by 8:30. So the AWS cloud server, everything which I've set up, that gets started at 8:30 and shut down by 4 o'clock in the evening. So whatever the trades that has been executed by my algorithms goes on automatically. Only if there is any specific issues with respect to errors, I get notified via Telegram. Only then I get into it or notify my team to look into it. Other than that, no, I don't interfere with the trades. So whatever the MTM fluctuation that happens, I don't give so much importance to it. I hardly monitor it. Other than meetings, either it would be reading books or researching about articles, where I spend time on sites like SSRN, Contocracy, BetterSystemTrader.com. So listen to these podcasts of any traders, or I listen to podcasts about some writers like Morgan Housel and other people. And if there is any specific meetings that has been already scheduled, I handle that. Other than that, I watch Netflix, Amazon, any specific seasons or series.
Cool, man.
So movies and books is where I spend most of my time.
I hardly see anybody without an earphone or earpiece, like listening to music and then also jogging or running. Everybody has it. So it's a refreshing thing to understand that you can actually do that and reflect on what you did the previous day, so that it becomes, rather than just a blurred memory, it becomes part of your life.
Right. Now, earlier, even I used to go for whatever the activities that I do, I put on a headset and I either it is workout or a walk, I used to do that. But morning, at least for half an hour, I specifically focus on not to wear the headsets and just enjoy the walk for 30 minutes. Because during those evening workouts time, definitely I listen to podcasts most of the time, not music. Either it will be some interviews from traders from some other channels like Better System Traders. So I'll shortlist whatever the podcast that I wanted to listen, and I'll just hit those podcasts.
You guys work from home, I assume, these days?
Yeah, right. So we had an office, but that was shut down by April 2020 during Corona crisis. And after that, we never thought of going back to office. We are more comfortable working from home. So we thought we'll continue to work from home.
It has been easy to do that?
Yeah, it is because my partner and myself and all our teams are located at different places. So they are more comfortable working at their own locations.
Okay.
So as long as the work is getting done, it's no issues.
Okay. Let's go back to the past. So what's your age, Kiru?
I'm 35.
35. Okay. What was Kiru doing back in 2010?
2010 and almost 12 years before actually that it's been 2 years since I started trading. I was in 2010, so I started trading in 2008. Not exactly 2008. It started by 2007.
A lot of
around
successful
September.
people these days, they started their trading back in 2007-8. Including Mr. Kama started his business in 2008 in Zerodha, more or less.
Right. Yeah, even I remember because I opened my account with Zerodha in 2010 around October or November, right? I was there one of first 100 clients when they opened. When I opened an account with Zerodha.
Okay.
And 2007-8 is where I started my trading journey, and that I was doing my final year of my college.
Okay.
And I came to know about trading because I'm from Chennai.
Okay.
And there are no specific people or no any specific relatives who are into trading back then.
Okay. Yeah.
And obviously no friends as
Relative
well.
this generation.
So so moreover in South India the risk part is very limited. People don't take risk and people still consider stock market as gambling here. So when I started trading, it was just with 5,000 rupees of whatever the scholarship money that I used to get from my college. I put that money into trading and started back then. And back then there was no discount brokers. We have only share accounts. So people whoever started trading back then, obviously 99% of the traders would have started their account with share account back then. Because that was the only broker back. Most used brokers back. They were providing trading, Trade Tiger, some other terminals. That was when I started trading. And I precisely remember because that was a period when Mukesh Ambani became the world's richest person. Until then, it was either Warren Buffett or Bill Gates.
Okay.
So
I didn't
for
know
a
that.
college guy,
I didn't know that Mukesh Ambani was once the richest person in the world.
Yeah, that was around September 2007, I think, because of market capitalization of Reliance Industries was top. That was the most valuable company,
that's good
highly valued, and he was just for a brief period, probably for 2 weeks or 3 weeks or for a month or so, he was the richest person because he surpassed Warren Buffett and Bill Gates, considering his overall net worth.
Point in time.
And that was the biggest headline. And moreover, Sensex was also going high and high. Between 2004 to 2008 January, market was going on one-way direction. Any stocks were, whatever the stocks that you buy, it tends to go up.
Okay.
Probably there could be a correction for 10 or 20%, and eventually it will recover within 2 days, and it tend to its all-time high.
Okay.
So everybody were attracted to the markets back then. So I was also not an exceptional guy. So but I started just by reading Economic Times, because it takes 30 minutes of travel from my home to to reach my college. So I just started reading Economic Times. I thought, okay, if there is no other resources, let me help out by myself and let me start reading Economic Times. And then I slowly opened an account, started trading by myself. I did not do paper trading. I did not spend so much of time on analysis. I thought I just have to get in and learn it by self. Because if you start waiting for the right time, it will never appear. You just have to get started.
What were you studying back then?
I was doing my BSc Statistics in my final year of college.
That must have been still helping you, I assume.
Even I also thought that statistics would really help, but actually I joined statistics because that was the only course which, if I've selected, I would be able to get selected for the college seat, because I was studying in Loyola College, and it was really hard to get into Loyola College back then. So statistics was the only course which was less famous. More people would not opt for such a course. Either they would opt for BSc Computer Science, BCom, Viscom. But very hardly few people selected statistics. Since I was also one among them, I was able to get selected in the Loyola College.
Okay.
That is the only reason I selected and opted for statistics. But it was really hard. If I have focused bit more and thought, okay, statistics would really help me out back then, I would have focused so much and studied back then. But out of 45 students, only 10 people were able to clear the statistics degree. It was damn hard.
Oh my God, really?
Only 10 people passed, and rest of them still average. They couldn't clear it.
Okay. Is statistics, bachelor's in statistics, still rare in Chennai, or it's normal now? It's mainstream now.
Now it's mainstream because now the number of applications that you get is more than 5,000 applications that you are getting for statistics, and only 50 people get selected for it.
Okay.
And
Okay.
back then it'll be like only 100 people will be applying for it, and 45 people will be getting it. Now it has become mainstream.
Fair. Okay. You opened your account in Zerodha. Then what?
So that is when I started, and the period, like as I said, I still remember I have bought shares like Unitech at around 520 rupees. Trying to sell at 540 rupees, and Unitech moved from just 1 rupee or 2 rupee to 520 rupees in just 3 years of time. So that was just one example. Any real estate stocks, whatever the real estate stocks, were moving up rapidly back then. So I just we're getting in and getting out in between those 4 months whenever the accounts that I opened to till January 2008. I was just buying and selling, and whatever the stocks that I was buying, it was going up. And I thought that is purely because of my skill that I was making money back
Beginner trader's luck.
so any beginner, so that is beginner's luck. So anybody who was getting started with the markets, markets will welcome them with both the hands, and it will give so much of profits. It will make you think that you have actually cracked the markets, and it is so easy to make money in this market. That is what eventually happened for me also. And then came the crash in January 21st of 2008. That was the first time I was actually looking at the markets and was so shocked because it was locked in lower circuit. I've never seen a stock closing down in lower circuit back then, and that was the first time experience, and that really shocked. And until then, like even my friends know that I've been trading, so everybody will be thinking me as, okay, this guy is genius, he cracked the markets and he's really good, doing it really well, probably I should give him my money. So that is when the first mistake happened. So one of my friend, he gave me almost 50,000 rupees
at that point in time
of his
okay
at that point
That's a lot
of
of
time
money.
of his semester fees. My close friend, my childhood friend, he said,
Is he
"You've
still a
been
friend?"
trading really good."
I wanted to get to
He's
that.
still a friend, and he gave 50,000. He said, put this money in the markets. Let's double it up. You buy one laptop, I'll buy one laptop, and then we'll take out the capital and put it into I'll pay my semester fee. This is what his plan is. And within 2 weeks, market crashed, and his 50,000 went down 50%. It was just 25,000. He was like, "What the fuck, man? I should have actually traded by myself. I relied on you, and you lost it within 2 weeks. Let me trade myself." And then he opened an account and he traded, and he lost all the 25,000 in 2 days. At least I was holding it for 2 weeks, and he lost it all in 2 days.
Oh my God.
And that was a crazy period back then. And and you shouldn't actually deal with friends if you're dealing with money.
Absolutely.
Be it business or be it
Friends,
trading. That is
relatives,
my personal opinion.
nobody.
No,
Don't mix and match.
Strictly no rules. Even till date, even if my friends ask, or even if my any of my relatives ask me to manage their money, I still say no. I could guide them, I could give them no specific guidance, but I won't take up the money, and I can't deal with it.
Fair enough. So you did your bachelor's, even though didn't you like it? And then along with that,
Yeah,
you
right. I did my bachelor's, and then I moved to Infosys. I got a campus placement, and I got a job offer from Infosys, and I moved
This is
to
what year?
Infosys in 2008 itself. This is in 2008.
I joined Infosys in 2006.
Oh, okay.
As there.
You two trained in Mysore
No,
campus?
my training was in Chandigarh only as the unlucky one. So this
Okay.
was the so Chandigarh campus was started back in 6 only, and it was
Okay.
the training happened there. I stayed in Infosys for 4 years.
Okay.
Still my number one, still my most
Okay.
lovable company till date. Okay, this is more about you. 2008 you joined Infi. Then what? Did you join Infi, right?
Yeah, I joined Infosys. So I joined Infosys in July 2008, and that was a period I was dabbling with markets as well as in Infosys, and almost and then I moved from Mysore to Bangalore, and I was still that was the actually extreme low period. Like I have seen both the extreme cases. 2008 it was
Yep.
peak, and by 2008 January it was peak. 2008 December or now October it was completely down. The Nifty was trading around 2,200 levels.
Oh my God.
And when I started, it was trading at around 6,600 or 6,500 levels. Within 8 months of time, I could see a drastic shift. And back then I couldn't decide anything. Like, even though that is when I getting started with my career, even though I could have bought multiple stocks at a very attractive price, but you won't get that.
Don't have the capital now.
The psychology is completely against you. You can't buy it. And I still know whatever the trades that I did between 2008 to 2014, almost for 6 years, it was completely news based. So just like any beginner, any news, any stocks that you see over news channel, or if it is being discussed in newspaper, I just buy it expecting it to sell it in 2 weeks. So that is what most of the trades that I've done. But just to buy the stock and sell it in for 2 weeks, I used to do so much of fundamental analysis. Like, I'll just track all the balance sheet, I'll check what the company profitability is. But back then I did not know, because you don't need to do so much of fundamental analysis if you're just going to hold the stock for 2 weeks. It doesn't make any sense, right? But I thought, okay, you have to do all these things, only then you would be able to make money. I still did that.
That's the right way to do it.
So
theoretically.
So for 6 years, that was my journey. And then one day everything got shifted when I read this book, How I Made $2 Million by Nicholas Darvas.
Okay.
So that was the first eye opener for me, and that gave me the light bulb moment. Like, okay, anybody could actually make money in markets. It doesn't really for you to have a background with respect to markets. You don't need to have a lot of degrees or educational qualifications.
I want to stop you there for once. You lost money 2008, and it was your debut in the market for a few months. You lost your friends' money as well, right? Unfortunately. Didn't you hate the market at that point in time? I don't want to come back to this. Market is a bitch or something. Didn't those kind of feelings come to you?
No, because I still thought, okay, probably I always had this thought, probably I'm missing something. So because everybody around us, so when you are trading at that point of time, 2008, like, you have ample of companion, because market was going down, so you're not the only person losing money. So you have so much of people losing money. So you thought, okay,
everybody's in the same boat, same ship rather.
Right. So you'll have a more okay, so probably this is not the right time, so everybody is losing money, and eventually everybody will make money once the market reverses. So because you had so much of companion, you thought, okay, you are still good, you can still try.
Fair.
So, and you will, and that moreover, I still thought, okay, when whatever the during the initial phase, I always say to many people that if you are getting started, get started with 1/10 of your capital. Back then I was student, so I was having only 5,000 rupees of capital. So even with my friends, it was just maximum 1 month of semester fees. But now people are having so much of surplus cash, like people in IT, people who are earning lakhs and lakhs. They get started, they'll just learn, and they wanted to get started with the markets with whatever the capital they have. But during the initial phase, no matter what we do, definitely we'll lose money, definitely we'll blow up account. So we can't come out of that cycle. Definitely that will happen, and only then you can cross over and move on to the next phase. But just try to blow up their account with a little capital, like as 1/10 of the capital. If you're having 1 lakh, just put some 10,000, learn it by yourself and lose money, and then get started. Because only when you lose your own money, then you will get to have all those, because that is when the psychology will come into picture. That is when the position sizing will come into picture. Because I still remember one day when I was working with Infosys, I lost 3 months of my salary in one day because of one single mistake.
Do you remember the mistake?
That was because on a trade with same Infosys. I was working with Infosys, and like I still remember every quarter I was working with Bangalore headquarters, and every quarter there will be all these news channels, CNBC, NDTV, every news channel will come to the headquarters for the quarterly results. So like I was just a rookie, and I was asking my team leader, like, oh, how is the company
insider
going?
trading alert, insider trading alert.
But what will the team leader know? At the max, team leader will know about his own team, his own project. That is what he'll know. He'll say, yeah, it's good, going well. I thought, okay.
And he would want to keep you motivated, so that you can talk to your friends and everybody. When I say everything is good, no problem.
Yeah, so he was giving positive feedback, and I thought, okay, this is good, so let me buy call options. And I thought, because that was I was just getting started with options trading back then. People say 10 rupees can go to 100 rupees.
They still say there are those people there who still the same thing.
Yeah. So I started that, and I still remember, next day's result. So the previous day I was buying options, and I started buying options by 11 o'clock the previous day, and slowly, the once you have a framework, okay, Infosys is going to beat the expectations or meet the expectations, results is going to be positive. Now you will go and Google everything about Infosys, and you will ignore all the bad news because you've already made up your
Behavioral
mind.
bias, something like that.
So you will
Confirmation bias.
yeah. So you have made up your mind. So I made up my mind because it is good, and I ignore all negative news, and whatever the positive news people were posting it in trading forums. I thought, okay, many people are positive. Obviously, it is going to beat the estimates or meet the expectations. So I kept on buying both the call option, and also I thought, if in case if it goes down, let me buy put option also. So I was actually buying both call options and put options, kind of a long strangle OTM options. And next day, I kept on buying, and then I realized, okay, I've almost bought 3 months of my salary with this one trade. And I asked my wife to transfer money because there was short of funds. She was asking, what are you trying to do? I said, no, tomorrow it's going to be a big day. I'm going to close off all the debts and all the loans and whatever it is. I was having so much
This
of
is your
conviction.
first big sort of bet you ever made.
Yes, this is my first. And so this is after series of small winning streaks. Because winning streaks will always do more damage than losing streaks.
Right.
Because when you're on winning streaks, your confidence is so high, you'll always think nothing can go wrong. So that is when the next day the market opened, and I still remember the whole night I couldn't sleep because I was waiting for the next day result. And by 8:30 the news started coming up like, okay, Infosys results is out. Year on year the profit was up this much, quarter on quarter profit was up this much. Portfolio was 50% down the moment market opened, and as the trade goes on, my the option value is eroding very fastly. And by end of the day, I almost lost 95% of my capital, and I couldn't figure out what went wrong. Then much later I realized, okay, there is something called implied volatility. There is something called the option premium tends to increase before the event. You shouldn't buy options before the event. You actually have to sell options before the event.
Okay.
A lot of things I get to know only later point of time. So that was the biggest lesson. Two things. First thing is, you should never dabble with options buying before the event, because the IV will be so high. And once the event is off, then the IV cools down. So obviously, because you're buying at a very high price, which is a bad time to enter. And second thing, no matter how confident you are, you can always go wrong in markets. So never put so much of money that you can't afford to lose. Because whatever that you have read, whatever that you have gained so far can shake your confidence in just one trade. So it will take so much of time and effort to come out of that zone. So that was a big blow. And that is when I completely stopped trading. I thought, okay, I'm missing something completely. I shouldn't trade unless and until I figure out what I was missing.
So would you recommend buying or selling options based on news or potential news, even if you think that you have news?
No, definitely not. See, news is something different. Interpretation is something different. Tomorrow, say suppose, I still remember there was one day Bank of Baroda posted a very good quarterly profits. It was a bumper profit, but it opened gap down. So we couldn't figure out. So you can't figure out based on news whether it is going to positively affect or negatively affect it.
So it's better to avoid rather. Something is famous, better take step away.
Right. So definitely I wouldn't recommend based on news. Even if you know what the news is going to be before it comes out, still we can't figure out the direction of the move.
In fact, the FIIs or people sitting up there with a higher capital or larger capital, they actually understand the interpretation, the right kind of interpretation, because they are not just looking at that news, they are looking at the overall ecosystem, how it's going to affect things.
Yeah, even if you look into the developed markets, there are multiple companies, large institutions, they use multiple alternate information tools. Like for an example, instead of relying on price, there is this company called H1 Winton Capital or some other company in US. They track the satellite images of parking lot of Walmart. So for a complete quarterly period, they'll check how many cars are being parked in Walmart. More number of cars equal to more number of sales. More number of sales equal to more number of profits. So they track this based on satellite images and see how many cars are being parked on a quarterly basis. And before the news is out, they'll take the position. They'll get into the trades. And then when the news is out, we people will think, okay, this is an excellent quarter, this is good results, we have to get in. And that is when they'll dump in money.
They've already made the money.
Dump all the shares. Because they've already made it. And they need liquidity. So that is when all these news will come up with some storylines, whatever the storylines that they could create. So these retailers will come in, they'll try to buy, and that is when they'll dump, and you will be wondering what this is good result, why the share is going down.
That's a fantastic way of looking at things. Like the news are actually made to bring volatility into the market.
Exactly.
That is fucked up.
So that is how people interpret the news. Like they know information much before.
HDFC and HDFC Bank, they merged few weeks back. The day this news broke out, there's upper circuit, and people went along with the wave. They bought both the company stocks, but preceding that, till date, their portfolios are in red.
Yes, that is what. So it is very difficult. That is when I thought, okay, there is something that I'm completely missing. So probably I should.
This is back
try
in.
to read more.
This is what year?
Sorry.
This is which year?
This is in 2014, I think.
Okay, you were with Infitil what year?
Yeah, I was with the Infosys around 2010 or 12, I think. Yeah, almost for 2.5 years I was there, and then I shifted to Xerox. Xerox is the other company which is based out of Chennai. So I moved to Xerox.
Xerox, okay. So you're in Infoscion for 2.5 years.
Yeah.
Okay, still IT? Xerox?
No, I quit my job in 2017. So okay. 2017 was when I completely quit my job and shifted to full-time trading and to focus on my startup.
Okay. So full-time trading. Now full-time trading implies that you're not doing anything else completely. You're just doing trading.
Yeah, see how this shift also happened is, and again I have to relate to this same story of Infosys, how I lost the money. So after I lost the money, what happened is I read this book, How I Made $2 Million by Nicholas Darvas, and that gave a complete perception about rule-based trading. So there is this guy who travels around the world, and this is back in 1960s and 70s when there was no internet penetration, and he was completely relying on stock information based on telegram. So he has to receive a telegram from US and New York, wherever he travels. Based on whatever the stock price that he sees on Telegram, he buys or sells. Okay. This guy made $2 million in 60s and 70s just based on this delayed price information, because obviously it's not instant price information, it's delayed. Okay. Like if the stock is
Telegram, guys, if somebody is watching Telegram, basically we're talking about actual Telegram, physical Telegram, not the Telegram app here. Okay.
Yes. So with even delayed information, he was able to make $2 million, and that to a dancer who doesn't have any background in markets. Was a big light bulb. Back then, whatever the books that I used to read, it was mostly based on fundamental analysis, like Intelligent Investors, which I couldn't even complete till now. It's so difficult to read those books. But this book, without using any jargons, you don't need to refer any dictionary, you don't need to refer any Google. It was complete storytelling about a person who made millions just following by simple rules. Like he'll buy stocks which is making 52-week high, which is making new high, and then he tries to sell it when the trend goes down. That is what all he did, and he had his own rules based on that, and he made millions. And this gave a huge conviction to me, stating, okay, if you follow rules, definitely there can be a possibility of making profits in markets. Then I realized, okay, if there is a process, there will be a progress. So obviously I need to find out this process and follow the process. Eventually the profit will follow. That is when I completely shifted from news-based trading to rule-based trading, and slowly started researching more and more about rule-based trading. Okay. So like rule-based trading, it's a simple example. For an example, what would happen if I buy a Reliance stock if it trades above 200-day moving average? What would happen if I sell it when it goes below 200-day moving average? These are clear-cut quantifiable rules, which can be coded, which can be back-tested with historical data. I can't trade based on head and shoulder pattern, a cup and handle pattern. So these are visual chart patterns which were created hundreds of years before, when the computer age was there. But if you go and try to backtest it, obviously you can't quantify it clearly with what is, because the head that you see could be different from what the head that I see. The shoulder could be different. So all these patterns are completely subjective in nature based on whoever is reading the charts. Okay. Then I completely focused on this rule-based trading, and then from then onwards I completely moved to algo trading.
So how long was this? Rule-based trading for you became as a necessity probably after you read that book and understood that this has to be done. This line of once there is a process, it leads to progress. Is it your line or you read somewhere?
No, it is my line. I was reading multiple books, so probably people were talking about process. And then I was linking with progress. And I thought, okay, this is good. So I still have that is in
So
my
this is-
desktop background.
This is pretty neat, man. Process leads to progress. When you moved into full-time trading, how was the society reacted to that? You're leaving a job in Xerox, which is very respectable in Indian society. You're doing a job in IT or in a mainstream industry of the mainstream company, into trading, which you're still saying that in India is believed as a part of gambling. It still
Right.
is. So how the society reacted to this? The society implies your family, your relatives, your friends, people who you care about.
Yeah, I did not tell any of them that I've quit my job. So why do you wanted to say that, and why
Okay.
do you wanted to convince them? I
Okay.
simply said, no, I just changed my job and they've asked me to work from my home, and nobody would ask me which company you are currently working. They'll say, okay.
You're not married
They-
at
this-
that point in time.
No, I was married and I was having a kid.
They did not suspect.
I was married.
They did not suspect something fishy, something
No,
different
I did
kind
not
of
tell my
skills.
parents. I did
Also
not tell my
parents
parents,
tell
but
you.
my spouse knows.
You're
She knows. Obviously, you can't hide anything
Yeah.
from your spouse. She clearly, she will tell me whether if I made profit on that day or if I made loss on that day back then. Like, if you're so excited that day after market hours, she'll know, okay, this guy made profits today. And if you're so dull, thinking so much about something else, then she'll come. By the time you keep the coffee, she'll ask, okay, how much money you lost today? I'll say this much. Okay, no problem. She'll move. And you can clearly, any spouse can clearly identify, if you're a trader, and if if you're talking to your spouse, she can clearly identify back then. But now she can't identify whether if I'm in a drawdown or hitting all-time high.
Now-
But back then it will definitely react.
You
I did not tell my parents back then. Only from my parents, I just hid it for a few months, a year or so, and then eventually they came to know.
once it became a normal, profitable,
Yeah, right.
money-making thing for you,
Right.
you could have
right.
already, yeah. Okay, but do people once now you're there, now you are setting up, you have set up your own thing for a while. So people in your circle would be coming to you and asking you, what stock should I buy? Look at my portfolio, stuff like that. Do they do that?
Yeah, it is still there. Like, people will ask for a guidance, but I just tell them, like, you get started with Zerodha Varsity. So I've written a detailed article in Quora. So I used to write in Quora so much back in 2014. Even till date I write, but I was not so active right now. But I've written almost 1,200 plus articles related to trading and investing.
Wow.
Answering all the investing queries and trading queries, everything. And it has so far crossed almost 15 million views so far in Quora alone. And I just wanted to
That's pretty
share
cool, man.
whatever things that I've learned, and also whatever things that I've learned which doesn't work. Because when you just say people like, see, I've tried these things and it doesn't work, and when people read it, it will cut short their learning curve. They don't need to again try same thing.
Correct.
And then eventually fail it and then think, okay, it doesn't work. So I used to write so much of data analysis and put some articles, write a detailed analysis stating, see, this doesn't work because I did all this historical data analysis and so it did not work. Even I still remember S-Bank and DHFL when it crashed in 2018. I wrote a detailed article on September 21st or 20th, I think, on 2018 when the complete both the stock crashed. It crashed more than 40%, and I wrote a detailed article stating these two stocks could go to a penny stock. Do not buy it. And I wrote a detailed analysis stating why it can go to zero.
Okay.
And many people commented that no, these two stocks are fundamentally good. And I think DHFL was Shah Rukh Khan was a brand ambassador. He said no, Shah Rukh Khan doesn't go for a brand ambassador just like that. He'll do all the due diligence. So definitely this company is good.
Yeah,
Some guy is saying no.
He's endorsing a pan masala, so yeah.
So that is what people will think. Now DHFL has so much of loan bank, and S Bank is the most valuable banking sector stock. So these stocks can't go to zero. I simply did a simple analysis. When these two stocks is crashing 40% in one single day, it is not a small thing. So obviously it is not a penny stock which is crashed. It is a big stock which is part of portfolio of multiple mutual funds. So when this stock is crashing, something is wrong. We do not know what is wrong. Probably the price reacts first, news comes later. But when you're trying to wait for the news to confirm, price would have already went down so far. I mean, it would have crashed more than 80% if you're waiting for news confirmation. So what I did is, see, these two stocks crashed more than 40% because they are part of FNO. FNO stocks doesn't have circuit filters. only non-FNO stocks as circuit filters, which can get locked by 10% or 15% or 20%. FNO stocks are part of whatever the stocks that are part of FNO doesn't have any filters. It can go down 90%, it can move. Jet Airways, I still remember one day it moved more than 90%, and Orcom crashed more than 80% in one single day. So these are part of fluctuations are normal, but such a big stock crashing 40% is not a single thing. So I just did a historical analysis of find out whatever the list of stocks that are part of FNO which has crashed more than 40% in one single day. I just did a simple analysis, and that gave me some 8 stocks.
Okay.
See, these are the 8 stocks which crashed more than 40% in one single day. I went back, and the companies were like Satyam Computers, GTL Infrastructure, Core Education, Unitech. These some 8 stocks, Akruti Infratech, and some all these
the
8
infamous
stocks
stocks who had a story to tell, the negative story to tell.
So all these stocks, after crashing 40%, I wanted to find out what eventually happened to them 2 years, 3 years down the line. Every single stock was trading as a penny stock. So the moment it crashed more than 40% in one single day, it was never able to come back to its previous high levels. It eventually traded as a penny stock. So even though we can't be so sure that this is the same thing could happen, but there is a high probability that this can happen with these 2 stocks. So I wrote an article and stated, okay, don't buy it. If you're buying, you might think, okay, yesterday it was trading at 600, today it was trading at 300, 50% discount, good attractive price, you might think. But what was yesterday and what is today has completely changed the moment it crashed 40%. So whatever the news, whatever the fundamentals that you read yesterday is not applicable anymore the moment it crashed 40%.
Absolutely.
You have to wait for the news to come out. So that is what I did, and eventually the news came out. By the time the news came out, obviously stock crashed more than 80-90%, and eventually DHFL was announced as bankrupt and unlisted. And S Bank, we know still it is trading at a penny stock. So these simple analysis could help us a lot. You don't need to wait for news confirmations. You don't need to do so much of analysis. Simple historical analysis would tell you, okay, if something has happened in the past, it is not 100% sure it can happen in the future, but there is a high probability that it can happen in the future as well.
If there are specific signals that are kind of correlated or similar in nature, there's a possibility that it can happen. Nobody can stock market. Nobody can tell anything for sure. But
exactly.
Yeah, I mean, whatever you wrote about probably, like you mentioned, was based on a study that you did on what could have what happened a few years back. Let's go to psychology now, trader psychology. Okay, let's talk about a difference between an investor's mindset, the kind of psychology that person has to carry or generally carries in India, versus a trader's psychology. And then I would want you to highlight any difference or any similarity between an intraday equity trader or an FNO trader, if there is something we can talk about on that.
Yeah, see, even with this S Bank and DHFL example, many people have become a long-term investor that day. Many intraday traders has become a long-term investor that day because they failed to put a stop loss or they failed to accept that small loss. They thought it would eventually recover. 90% of the long-term investors in India are actually intraday traders who fail to put a stop loss or who do not want to book a loss at a shorter period of time. Eventually, they'll think, okay, let it be a long-term investing. Many people don't want to get rich quick slowly. So there is this beautiful example, right? Everybody knows Warren Buffett, and most of them know Charlie Munger as well. Obviously, Warren Buffett and Charlie Munger together built this Berkshire Hathaway. But there is this third person called Rick Guerin. Nobody knows about Rick. Yeah.
Okay.
Very few people have read about it, or many of the investors would have not known about Rick. These three actually built Berkshire Hathaway, but Warren Buffett has become the wealthiest person. Charlie Munger is also a wealthiest person. But what happened to Rick? He has gone completely bankrupt. But this guy was part of Berkshire Hathaway. So what mistake he did?
He sold off.
Yeah, during the 1987 crash, when the market was crashed big time, this Rick guy, what he did was he pledged his holdings of Berkshire Hathaway and took some leveraged positions. So obviously he ended up getting margin call. So he has to liquidate his positions.
Correct.
So those positions was bought back by Warren Buffett, and eventually he sold off his holdings. So when one guy asked to Warren Buffett about this in an interview, he said, me and Charlie Munger, we very well know that we will get rich one day, but Rick also knows that he will get rich, but he wanted to get rich quickly.
He wanted to get rich tomorrow. That one day is tomorrow for him, apparently.
Yeah, so that is where the mistake is. Most people, they wanted to get rich quickly, so they consider investing is boring, or investing is not their cup of tea. Trading, they see an instant result. Whether you make a profit or not, they see an instant result. They wanted to get to know the outcome very immediately. And moreover, that is how it has been socialized in social media as well. Like if you go and see a lot of MTM screenshots, people posting, I made this much today, I made that much today. So when people are getting started with trading, obviously they'll see, why should I wait 30 years or 40 years to get that benefit? Let me start and do trading alone. But investing is altogether different. Trading is altogether different. Investing, it's just like you start with an SIP. Like I always say, when I quit my job in 2017 during my farewell day, I just told this one single advice to all my colleagues. I told them, see, all these people who are working at Infosys or any IT companies, they'll have this PF money, right? Every month, this provident fund is getting debited from your salary, and which is being accumulated. And after 20 years or 30 years, if you're going to retire, you're going to get a corpus. You check what is this PF. See, my friend has been working with Infosys for 15 years right now.
Yeah.
And like when he started his salary or his career with TCS, probably his PF would have been around 2,000 or 3,000.
Right.
And eventually it would have been growing, and now it could be around 50,000 or 60,000 is the total PF that is getting debited from his
Possible.
account.
Yeah.
From starting to till date in this 15 years, if he has taken the same PF amount, say suppose if his PF is 2,000 rupees, take same 2,000 rupees and put it in your own company, like buy your own TCS shares. And after 5 years, if your PF is say suppose 10,000, take same 10,000 from your salary and buy a shares of TCS of 10,000. And then if you have replicated the same thing, just put the same PF money and buy the shares that you want, or buy the shares that your company that you're working for. So 15 years is such a long time working in one single company. You can't be there if the company is not doing well.
Yeah.
So obviously the company is doing well, so obviously it should reflect in share price. So in 15 years, if you have done the same thing, obviously you would be holding a crores worth of portfolio right now, and compared to your few lakhs of
PF.
portfolio of PF. And you did not make much difference. You just replicated the same PF money and investing in it, and you have been investing for quite a long time. The moment you feel like you wanted to retire, but the money that you are getting from PF versus the money that you are getting from the same amount which you have invested in your company would be so different. Now it will be so high. So you don't need to buy lump sum. You don't need to give too much of analysis. This simple thing would have made so much of difference.
Very refreshing way of looking at things, wherein I am working in a company and I'm assuming that I'm working in the company for 15-20 years. That company is fundamentally strong. Correct. So
Right.
it's a very
Exactly.
different way of looking at things, because you trust that stock, you trust the company, that company is paying you. Take that
Right.
money from that company and invest at that company itself.
Simple, that's all.
Smart move. Smart thought of investing, yeah. Okay. But how
So that is how
how
investing.
would
With
a
regards to
trader
trade-
how would a trader think about this?
Yeah. Say with regards to trading, the thing is, three things. Like most of the trading strategies or trading rules relies on three things. Whether it could be a trend following breakout, or it could be a mean reversion, or it could be a momentum basis. Any
Okay.
strategies will fall on these three categories. But when you're trading a breakout strategy or a trend following strategy, you can't just look, okay, see, I'm trying to, this is my rules. My rule states that if I buy, if I buy this stock above the super trend level, or if I buy this stock above this 200-day moving average and sell this below this 200-day moving average, whatever the rules, whatever the breakout rules it is, you will test it and you will see this is how your overall returns looks like. Okay, in last 5 years, if I traded this strategy, I would have made this much, and you see you are getting excited about it, and because it gives so much of profit.
Right.
Now when you're trading it, you don't get the end result immediately. It takes obviously 5 years, right? So that kind of 200% or 300% returns that you see in backtest, in order to get that, you have to go through a lot of drawdowns. You have to go through a lot of losing streaks. You can't get that 100% return in no straight linear returns. It can be downside for some months, it can be upside for some months. But if you observe closely, any breakout system or any trend following system, 80% of its overall profits will come from 20% of the trades.
Right.
So trend following completely follows Pareto principle. So it is just like our own life, like whatever you are right now, it's because of the 20% decisions that you've made in your life.
Correct.
If you are it could be anything. So in life, in be it any sport or be it in trading, everything follows in this Pareto principle. So when you're trading, you have to have this right mindset. You just have to zoom out and say, okay, my expectation is to make returns by the end of the year. I'm not worried about the outcome on a monthly basis, on a quarterly basis. So when you have that mindset and when you trade that kind of strategy, then it is easier for you to stick to the system. So whatever the system, whatever the rules that we are trading, we have to make sure whether we can able to easily adapt to it or not.
But how do
because if you're not following it,
how do you make sure? See, let's say I want to be profitable and X percentage of profit is what I'm looking at the end of the year. That's a target I want to achieve. But there would be few weeks or few months or few days in that year that you would want to use more of your capital. You will have probably a higher risk appetite during that phase as compared to the time when the market is not that volatile, not so much is happening at them. So how do you control that emotion that no, or you don't control that emotion? You take that risk.
No, see, the emotional part will move away at one point of time. See, as long as you follow the process. See, there is this guy called Tony Saliba.
Okay.
I met this person, Tony Saliba, in a CMT meetup in Mumbai during 2019, I think.
Okay.
So Tony Saliba is one of a person who was interviewed by Jack Swagger in Market Wizards book.
Okay.
So Market Wizards is a book which is actually a compilation of interview of traders across the world. So Tony Saliba is one such guy who was an option trader, and this guy was being featured in this Market Wizard book during the first version itself. And when he traveled to Mumbai, I asked him this question: okay, you are now what you are because of many decisions that you would have taken, but is there anything, that one single lesson that you wanted to share with us which is a turning point in your life? He said this incident. So he had this capital. He was running some restaurant business, I think, and he was selling its part of his business and putting his money. Back then, if you have to trade, they have to get some exchange seats, because it's not electronic trading back then, I think. So he was getting paying so much money to get a seat in the exchange to trade, and he eventually traded. Whatever the analysis that he did was actually making profits. Like, his analysis was right, but still he was losing money.
Okay.
Like, he'll say if the market is going up, it'll go up by the end of the day, but he'll be ending up in loss by evening, because before it goes up, it can go down. So he tends to change his view. So over the period of time, he lost so much of money. Then when he sat back and thought what went really wrong, he found out that whatever the analysis that he made was actually right, but he was making losses because he was trading with a higher capital that he can't afford to lose. Because of that, his emotional imbalance comes in, his emotional part kicks in, and he couldn't be the trade before it gives profits. So he decided one thing: next 1 year, I'm not going to trade with all my capital. I'm just going to trade only with one lot, no matter what.
For 1 year?
Because I can see, for 1 year, he traded with one lot, and he bought that seed for paying lakhs and millions of money, but he was trading only one lot. And every guy around him used to call him as one lot trader. Even you have mentioned that in the book. Hey, this guy has come, one lot trader has come.
Oh my God.
But this guy was focusing on the process. I'm not bothered about making profits today or tomorrow or next month. I just want to make sure I want to become a good trader. If I wanted to become a good trader, I just need to have a process. I need to follow that strictly without having any emotional interference. And he did that for complete 1 year. So this 1 year, he just followed the process and he could see the profits in his hand. But he was able to get profits because he was trading with the money that he can't afford to lose. So eventually he realized, okay, I'm a good trader, I'm doing good with the analysis, but I was really bad at position sizing. So going forward, I should size my position accordingly so that even if worst thing happens, I'm not going to lose 1% or 2% of my overall capital. If I stick to that, eventually my profit will occur. So this is what exactly we need to follow as a trader. So you don't need to become profitable today, tomorrow, or next month or next year. You just have to follow the process. Over the year, eventually, once you get used to the process, eventually the profit will follow. But following that process is what hard. But if you have to follow that process, just like this one lot trader, make sure that you're trading with a lesser capital. I always have this 100 days Excel sheet, like just put the date. Say today's date is 2nd of June. So 2nd June, 3rd June, 4th June, for the next 100 days, write the dates. Next to the date, Say suppose if you're following any specific strategy and you just update that strategy for the day and the result has come, if you followed the strategy,
Okay.
just give 1 mark next to the date.
Okay.
If you override your rules, give -2 mark. Doesn't matter whether you're making profits or loss, whether you have followed the rules or not, that is what matters. For the next 100 days, just add your marks. If you're not overriding, +1. If you're overriding, -2. Then do it for the next 100 days and calculate your overall score. As long as if your score is more than 90, you are a disciplined trader. If your score is less than that, you are not still disciplined enough. You still have to work on it.
So I was talking to few days back, I was talking to another a trader, full-time trader who's been there for a few years. He said that a trader is like a hunter. You don't have to hunt the whole day. Just to watch the market the way you watch it. It's not just watch the charts or something, whatever the way you follow. And then when your trend is in position, just go for the hunt, take the position, get out of it, because you're a trader, for few minutes, few seconds, few hours, let's say, and then get out of it. And that is one thing that person has been following. This is another thing that you sort of taught today, that build a scorecard for yourself. Okay, so if somebody follows and actually does that, you have to, and brings out a number like 90 numbers out of 100. Is it something that they have to follow consistently, or once they have done 90, okay, I passed the result, now I'm gonna follow the same pattern forever?
Yeah, right. So, it's not about actually the score. It's about the process that you follow. So once you eventually follow that process for quite a long time, you will observe two things. One thing is every day you will start journaling your trades. You will exactly write down what is the trade details, what happened, what went wrong, what went right, everything. And second thing, you yourself subconsciously, have so much of pressure that you need to follow the rules instead of focusing on the profits. So eventually you'll get used to it. And third thing, irrespective of the market fluctuations, you will understand how your strategy behaves. With just when you're trading with only one lot for 100 days and observe how it works, you will precisely know, okay, my strategy, this is how it behaves when market moves on a one-sided direction on upside, or this is how my strategy reacts if my market is completely volatile. So with different phases, you will understand how your MTM fluctuates from morning to evening. So this gives so much of confidence, and then you have to increase your lot sizes. So adding this lot size also has a story. Like there is a person called Milo.
Okay.
This person actually is from ancient Greece, and this person is the most the most famous person who was won multiple championships. And this guy is actually a wrestler who won multiple championships and multiple Olympic medals back then in Greece.
Okay.
This guy Milo, everybody wanted to know how this guy is so successful, how he could win championships back to back. So next, there was one point of time where this championship trophy or the tournament was announced, and they put Milo on stage, and then they put this competitor, one more person on stage, and said, "These are the two guys who are going to wrestle 1 year down the line, or in the next tournament." And now all these people who are tracking Milo and the other person wanted to know how this guy could beat the other guy. Milo could beat the other guy. Milo directly went to a market and bought a small calf.
Okay.
And the other guy bought a big bull, because they wanted to train hard, and the other guy wanted to lift the bull so hard so that he could train hard his muscles and he could eventually win. But this guy was buying a calf, and everybody was curious, why should a Milo 6-time championship should buy a calf, whereas this guy is buying a bull and trying. So whatever the competitor is doing makes sense, but whatever this guy is doing, it doesn't make sense. So they were asked, they were trying to track him. But what happened was, this Milo fellow, he carries his calf wherever he goes on his shoulder. Every single day. If he goes for a walk, he'll carry it on his shoulder. If he goes for a shopping, he'll carry it on his shoulder. Eventually, this calf grows and grows and grows, and he is able to lift it eventually, because he is lifting it every single day. He even did not realize it, that the calf is growing. Eventually, when the championship came, he was able to lift the bull effortlessly because the calf has grown into a bull. But the other guy was trying to lift the bull from day one, couldn't lift at all because he was not used to it. This is exactly how trading should be done.
Dude, that is next level stuff, mate. So, oh, he was training himself that subconsciously or unconsciously, rather, whatever you call it, I'm gonna get trained myself without any extra intentions of actually doing that.
Exactly. So you would trade with one lot, you trade with 3 lots, then move to 5 lots, then move to 12, 13, 15, and then you could effortlessly trade with 100 lots. If you're trying to trade with 100 lots from day one, you would never be able to do it even though you have money. So that is why, money doesn't matter, capital doesn't matter, whether you're following the process or not. When there is a process, there will be a progress.
We can put this line honestly, in any facet of life, for that matter, not just trading.
Yeah, definitely, exactly.
Wow, man.
Very true.
I want to stay in the psychology thing, man. I want to stay there. I want to talk more about it. So, let's say somebody who is coming from a third-tier city, a third-tier town or village in India, who doesn't have access to good education, who is probably 20, 25 years old, and wants to be a full-time trader. So this person is detached from the urban world problems and stuff. In Hindi we call it dunyadari.
Okay.
So how would that person go to that these are next level stuff. These are next level things. I mean, your education definitely helps. Your external factors, wherever you're living, your kind of circles you've been, that definitely help. But how this person, I'm talking about the demographic guy, how that person can have that kind of a mindset once he wants to be a trader? He's gonna face extra challenges. You get my question, right? You understand what?
Yeah, I get it. So no, with respect to a person coming from tier 2 or tier 3 cities doesn't have much exposure, there is no much difference right now. If you're asking about 10 to 15 years, it's fine. But now, after the penetration of Jio, even the people who are in tier 2 and tier 3 cities are watching Money East, or watching dark series, or watching Netflix, and they have access to every single thing that we are also having access, thanks to Jio internet. And it has gone to a greater extent. Like nobody out there is there without internet now.
True.
Every single, just like how like imagine 20 years before or 15 years before,
Yeah.
when you are in your neighborhood playing in your street, suddenly when the internet, when the power goes off, like everybody will be shouting, like you will be playing, you will be roaming around every time, you will be playing hide and seek.
Yes.
The moment power comes and you keep shouting. That is exactly what internet is right now. The moment power goes off 15 years before, you keep asking your mom and dad when the power will come. Now internet is similar. The moment internet goes off, everything goes off. Like your kid will keep on asking you when the internet is going to come up. So that is the reach of internet right now. So that is more than enough for you to get the right knowledge. You just have to get to the resources, the right resources. And the main problem right now is not the availability of resources. The availability of resources is a lot more.
It is.
You just need to filter out the noise. There are a lot of noise out there, so you need to filter out what is good, what is bad, and then pick up that and then follow that. So you don't need a lot of educational backgrounds to crack in the markets. You just need a little bit of capital, and you just need a lot of perseverance to stick to because everything has a price in this world, but the price that a trader pays is through anxiety, through stress, through sleepless nights. You have to go through all these things. Otherwise, just like becoming a doctor or engineer by any profession, people can read it and work on it for a few years and become an expert. But here it is completely different because you have to go through all those phases. Only then you would be able to stick to it. So it is possible for any persons coming up from tier 2 or tier 3 cities. You just need to follow the right people, just read the right books. That is more than enough.
Fair.
Actually, it is much easier now than 15 or 20 years before.
So you yourself, I assume, have read a lot of books in your journey of trading and investing. What other sources you had access to, or you looked forward to the kind of mindset you have today?
The resources other than books, obviously these YouTube podcast has helped a lot. Like
Okay.
you just watch those traders interviews,
Right.
watch those podcasts like Better System Traders, and there are multiple podcasts in Spotify and other channels. That has really helped. And addition to that, they always say, what you do between 9 o'clock to 3 o'clock during market hours doesn't matter. What you do outside of the market hours decide you're successful, whether you can be successful in market or not. Because a guy who's going out every single day and following a specific routine, just he goes out for a walk, or he goes out for a cycling, or he just does a workout every single day, or he goes for a swimming. So these athletes or these people who just have a small routine every single day, if they are following that same routine every single day, and if they are coming to the markets, the probability of them becoming successful is a lot higher, because they are already disciplined outside of their trading life. So once you create this, being disciplined outside of your trading life, it will automatically come during your trading hours. You can't wear a mask, like you can't be one person between 9 to 3 and another person after market ends. So only what is there outside of market hours reflects during your market, during the market period, and that is eventually decides your successful factors. So that is the thing. So we have to be disciplined outside of your trading life. So that is why everything is having a specific routine in my life. I 6 o'clock waking up, or 10 o'clock going out and going for the walk, and every Saturdays and Sundays I go for crickets. And road trips, all these things. Road trips, I regularly
next time
go
call
on
me,
road
man.
trips, very
I
frequent.
want to play cricket. It's been a long time I played, but
Definitely. So these things as routine, right? So this helps a lot.
Okay, fair. I see a couple of books behind you. Is that a book?
Yeah, that is The Man Who Solved the Markets. That is about Jim Simons. So Jim Simons, and that is like, when I started trading, everybody would know about Warren Buffett. But by 2014 or 15, when I started reading about algo trading, I came to know about this person called Jim Simons, who runs a hedge fund called Renaissance Technologies. And this guy is a famous mathematician who worked as a code breaker with US intelligence, and then he quit his work and started his hedge fund called Renaissance Technologies. Then I came to know Renaissance Technologies, which runs a medallion fund, is able to beat the markets every single year from 1988 to till date, with AUM of more than $10 billion.
Okay.
And every single year, so their average returns on a yearly basis is more than 66% returns. Average returns of Warren Buffett is 22%. And this guy is able to beat Warren Buffett 3 times of it. And that too without following any fundamental news. This guy is a pure data guy. And this Renaissance hedge fund doesn't hire a single Wall Street guy. They have mathematicians, they have physicists, they have astronauts, they have rocket scientists.
Ooh.
Everybody. He hires all these people who are not related to markets, but people who could interpret the data. So that is why I always say data is a new oil. They don't say data is a new oil because just because Reliance is having a Jio or anything else. But data is a new oil, definitely. If you could interpret the data, you could make money. And that is what these guys did. So they were able to track 200 years of data from Dow Jones and US markets, and they try to track anomalies from that. They have a team meeting every week, and they try to brainstorm ideas, and they track multiple different patterns, and they come up with their own strategies. They run so much of strategies across the world from different markets. They trade stocks, equities, commodities, currencies across all world markets, and they are able to get in and get out in few seconds. Sometimes they hold it for a few days, sometimes a few weeks.
Okay.
But none of the profits came from long-term investing. Everything was short-term trading.
Wow. Beating the general business conventions of the society, the social structures. Not so social, but like the business structures. Like if you are a Warren Buffett or if Wall Street guy, you need to have financial analysts or investment bankers. They're hiring rocket scientists for that matter. Oh my God.
So that is how. So that was the huge eye opener when I read about Jim Simons. So I've read every single interview of him. I've seen every single interview, every single talks, every single speech in YouTube. And when I came to know that, okay, there is this book coming out about this person, because that is the only book about Jim Simons. There was no book out there. So this was a complete biography about himself, how his complete journey and everything. So I pre-ordered from US and then got it from there and bought it and read on the same day.
How do you? So I see that you filter out your select books in a very. I have not really seen it. It's no pattern. You select books which are not generally out there, not mainstream stuff. How do you select your books?
How do I select? I never thought of it. How do I select my books?
What do you look at before you say that I'm going to commit like few hours or few days to this, I'm going to read that shit out. Sometimes some
See,
books are
there
shit, but what's your strategy?
Yeah, see, I don't go by, first thing, I don't go by the title. So the title is kind of a clickbait. So I don't believe on title of the book.
Okay.
And second thing, I just read, I used to read multiple blogs and listen to multiple podcasts. There will be some people who will be quoting something about a book. I'll just read one line, and that line will immediately have a connect. Oh, this sounds interesting. Probably I should read more about this. And then I search more about it and then get to know about it. And then I go and read. See, I'll follow multiple people like Morgan Housel, the author of Psychology of Money. So that is the best book I've ever read so far, and because of the storytelling. So anybody could write a book based on formulas. Anybody could tell about how to do this, how to do that. But when you're trying to teach something, there should be a story behind it. When you are explaining something along with a story towards it, it goes and sits in your mind forever.
Right.
And it is easy to understand, and easy that you grab the content so easily. So people who are writing regularly write good books. If you see, specifically people who write good blogs or write good contents, they usually write good books also. So when Morgan Housel came up with a book, it was hit. It was 1 million copies sold. Similarly, James Clear, who read this Atomic Habits book. Atomic Habits was a fantastic book. Like, you can actually learn more from trading from non-trading books.
Yes,
than from
I've heard that
books.
quite a bit. A lot of people say that. A lot of prominent people say that.
Exactly. So what is useful for your life will be useful for your trading. So Atomic books helped me so much. Like, I was in I could completely read that book even for 2 to 3 times. I've read many books 2 to 3 times if the book is really good, because the first time you read, you'll learn something. Second time you read, you will be astonished. Third time you read, like, you'll be in shock. Oh my god, how could I miss it?
Okay.
So these books are selected based on some snippets that I've read somewhere, or because of the author has been writing good articles, so I wanted to follow him when the book is out.
Fair. I want to quickly move to the last point. The psychology. Let's stay on psychology part. I somehow want to connect psychology to algo trading. So somebody who is doing algo trading, completely reliant on a machine to do the dirty work, how is that person's psychology? I assume subjectively that the psychology will change when the person was doing manually versus when the person is reliant on a system now. What would that change be, if I'm right? And how would that transition be easy or difficult or whatever?
Okay. See, with respect to psychology, for a person who's trading manually and who's trading through algo trading versus a guy who's trading completely through discretionary, like no rules, but he just follows based on news or whatever it is. So there is a huge difference here, because when I started doing algo trading back in 2014, or when I started my squareofbots.com in 2017, I had this perception in mind, like, okay, algo trading removes emotion.
Okay.
So when it removes emotion, it removes error. Like, you can be in trade, you can make profits. So all these months I couldn't make profits because of the emotional interference, emotional imbalance. So the moment I go for algo trading, the machine is taking the trades. So obviously it will not affect me, so it is going to end up making profits. So 99% of the people who is researching about algo trading or who wanted to get into algo trading will think that algo trading removes emotion, but that is the biggest myth. Algo trading will not remove emotion.
Okay.
Because the trigger is still in your hand. You can always pull out that trigger. So when you're making profits, you will always able to have the control over it. So it is not that you're not having the control. So you can always stop the algo machines. You can always think, okay, I'm getting 5 streaks of losses. Probably the next 6th trade I shouldn't take. I should move to paper trade. I'll watch it and then I'll go to live trade. So the moment you move to paper trade, it would have recovered from drawdown in just 1 trade. But you would have missed the trade.
Yeah.
So these things will happen, be it manually or be it in algo trading. It will definitely happen. Algo trading will help you with executions. Like, there is no error on executions. Like, manually, instead of call option, you could buy put option. Instead of this stock, you would buy the other stock. But with algos, the execution is so robust and it reduces your slippages. That's one thing. And second thing, there is no manual errors because there is no manual entry here. And third thing, it helps you to stick to the process, because before you trying to think whether to take the trade or not, the machine would have already triggered the trade. So obviously you'll stick to it. So to a certain extent, it reduces your emotional interference, But definitely when you have these 5 streaks of losses or 10 streaks of losses, be it manual trading or algo trading, that emotional interference will always be there. But the longer that you're staying to the system, the longer you're holding it, just like that one lot trader, then the emotional interference goes down slowly. So they always say, like, a good trader feels good after a good trade. A great trader feels nothing after a great trade. So
Okay.
whether it is profit or loss, you don't feel that. You don't eventually will not feel okay. You will not feel excited anymore at one point of time. Once, because it will be very boring. That is why I've been watching Netflix. I've been watching Amazon Prime and all these series and videos, because boring. Good trading is actually boring. It will not excite you. Good trading is all about following the same process every single day, 365 days. 255 days. So obviously, it will be bored because you're not going to change anything. The moment you try to change anything, you're going to mess up. So once you feel it is working fine, just leave it and just follow the process. And when you're following the process, obviously it will be boring. So you will not have the emotional interference at one point of time.
Generally, for an informed trader, how long would that take to become an emotionless trader?
That also depends upon how you deal in your life, like how you take your success, how you take your failure and everything in general. Like, say, suppose if someone is saying good about you, someone is commenting really good in your YouTube channel. Say, suppose in your case, you are a blogger, you run your channel and you have your own business, right? So someone gives you a compliment stating you are really doing good, you're really doing great. If you really feel happy, you could feel happy, and over a period of time you will really feel happy because you're receiving positive feedbacks. But if you're receiving the most negative feedback, someone is cursing you, someone is saying this is total crap, these contents are not good, how you react to this content versus how you react to the compliment content. So there is two things.
Right.
If you're excited so much, if you're so happy about the good part, you will equally be so mad about the bad part. Like, you can't take that. How could this person say I've been putting so much of effort, how come this guy is giving a negative feedback? So if you are now having a state of balance, like, okay, if whatever good comments you're saying, okay, I'm happy, thanks. Whatever the bad comments you're saying, okay, fine, I'll improve. If you're having this set of mindset, and then if you move on, trading becomes much more easier.
Okay.
And it takes so much of time to realize this.
Now, I can totally relate with that. So, at the onset, like back in 17, when we started this YouTube channel, for first 3 years, I would say 2 to 3 years, I was getting a bit excited on either side. Now, for me, it's a work. Like, for a team, it's work.
Right.
Okay, somebody has put a comment, let's answer that accordingly. Somebody has crapped
Right.
it, let's put a comment on this that we're gonna improve that and stuff. So emotion
Exactly.
is out. Last couple of years, it's
Exactly,
completely
because
out.
earlier you were focusing on the outcome. Now we are focusing on the
Process.
process. You have just set your process, and you're not worried about the views. You're not worried about the comments. You just wanted to do this and move on to the next work.
Absolutely.
That is exactly, once you're into this zone, then the success is very near. But earlier we were like refreshing every single time how many views and how many comments it has come. You have given so much of concentration on the outcome, but now it has moved to a process. This is exactly
So
what trading
you're from
is.
Chennai. So the Chennai Super Kings captain or Indian captain, Mr. Mahendra Singh Dhoni, he's emotionless.
Yeah.
Either he's winning or he's losing.
Yeah, exactly.
So he applies that
Very true.
same logic. Huh?
He is a perfect example for a best trader, actually.
Yeah, that kind of mindset. It's kind of difficult versus Virat Kohli who jumps around.
No, it is really difficult for Virat, and it is really difficult for his wife to handle Virat, actually.
Actually, man. Okay, cool, man. Kiru, it was really, really. For me, it was very informational, and I'm pretty sure for the audience as well. There are quite a few things that they can relate to. The stories that you brought, the book readings, the book memories that you had, and especially the Infoscian connection that we have. All
Right,
of that,
right,
man.
right.
All of that. It was an amazing discussion, and I loved the conversation.
Sure, thanks, Azim. Even I didn't realize that. It's been almost 1.5 hours that we've been talking.
Really?
I really, enjoyed the session.
It's been one. Oh my god! Yeah, it's been a while. Yeah,
It's
no
good.
track.
I really loved it. I really
Same
loved it.
here, man. Same here. Hopefully, we'll connect
Sure.
again soon for something else.
Sure, Azim. Definitely.
On the business side, you guys are into algo trading yourself.
Yeah, right. We have a platform called squareofbots.com. So we, just like how small case is for investing,
Okay.
Square of Bots is for trading. Like we have basket of strategies where people based on high risk or low risk or medium risk, they could choose what kind of strategies that they wanted to trade. So all they have to do is log into the bots portal, enter the number of lots that they wanted to trade. Say suppose if it is a short straddle strategy, you just enter the lot size and it would automatically place those respective entries, stop loss, targets. So whatever the strategies we have already explained in the website itself, like this is a strategy, this is the rules, this is how it has performed in the past. So people just log in and enter the lot size there and automatically execution happens. So we have tied up with some 9 different brokers so far.
Okay.
So whoever have an account with these brokers like Alice Blue, Fires, Edelweiss, multiple brokers are there. So with people, whether from mobile or from laptop, they just go to squareofbots.com and log in with their broker. If they already have an account, there will be some 2 weeks of free trial which already gets enabled by default. So they would be able to access all the bots, enter the lot size, and it gets executed automatically.
Okay.
And by end of the day, the square off also happens from our side. So it's completely fully automated platform which executes trades based on these predefined rules, predefined strategies.
So these strategies, do they tell the potential profit or the risk factor or something? I mean, how would a person decide?
Yeah, everything. Like if the people just go to squareofbots.com and click on performance, they would be able to see like how this, what is the average profit, or what is the actually maximum drawdown, what is the risk reward ratio, what is the profit since inception, what is the net profits after all charges. Like we have included all charges like brokerages, transaction charges, clearing charges, STT, SEBI, GST. After all charges, what is the net profit? So we have updated on a day-to-day basis. Like today the market is closed, so today if you go and see in the site, it will get updated like this strategy has made this much returns.
Okay.
Like if someone is trading with one lot, like if it is with 3 lakhs of capital, this is how the overall returns looks like. So everything gets updated, and we are coming up with a new plan. There is already a new platform called OptionX. So squareofbots.com comes with inbuilt strategies.
Okay.
We have created a separate platform called optionx.in, which is a platform to customize your own strategy. Say suppose I wanted to trade a short straddle strategy, which can now enter into a trade at 10 o'clock, and then with a 10 or 20% stop loss or 30% target. These are customized thing which you can directly trade it for free. It's completely free tool where you can just log in and customize your own strategy and just trade it automatically.
I just need to type it, or so generally what I hear that you can code your strategies or something.
Yeah, there is no coding here. It is kind of a no code platform. You just have to click and drag and drop kind of a thing. You don't need to do any coding out there. So everything is pre-built. So people just go there and enter ops. Like if you want, I can show it on the screen.
Okay. Is it in line? I mean, you can show. I would like to see. Is it in line with the EXE algo trading softwares?
No, this is a web-based platform.
I
You
know.
don't need any, EXE
That's what I'm saying.
applications.
Do you guys? I mean, is it as advanced as EXE?
Yes, it is just similar to EXE application. Just like how you download an EXE application, do the configuration, and then fire the trades. This is completely built on a web server where you just log into your mobile browser or from laptop. Just go to optionx.in and you just select the strategies, whether it's short straddle, long straddle, or at iron fly, whatever or you can create your own option strategies and just enter the inputs, and it creates a button. You just have to click and execute.
And there is, from SEBI compliance point of view, are these algo? I mean, there is quite a bit of, SEBI's been looking at these.
See, with respect to SEBI, there is 2 things. SEBI always wanted to regularize this, algo or algo marketplace, because the rise in algo traders is so huge, and the rise of algo platforms is also so huge, and there is always a mis-selling happens. So with respect to algo trading, if I go and tell a user, see, this strategy generates 80% profit, come and trade. That is what 90% of the people do. What we do is like, we, instead of selling them with fear, selling them with greed, we sell them with fear, stating, see, this strategy can go down 30% before it gives you 80% returns. Are you okay to take that 30%?
Don't tell me that's your marketing statement.
So when you
Don't tell me that's your marketing statement.
No, that is what we do. We just instill fear and tell them, see, we create a fear and then tell them, explain this. And then the moment you explain fear and bring in a people, they'll stick to you forever. The moment you put a greed and bring you on them board, the moment they see a drawdown, they'll move away. So that is what you have to educate and execute.
How old is your
you
platform?
Shouldn't just execute. No, it's been old from 2020 April. It's been live, so almost for 2 years.
So
I
what's
think.
your, in terms of age, what's the average age of your client? How long that client stays with you? That will
For
tell
every-
the answer of the question that I was getting to.
So no, whenever there is a people who are subscribing to it, the first thing that we say is there is no monthly subscription. So there itself half of the client will go, because if you are not able to commit to a 1 year subscription, because it is just like gym, you're going to a gym
Oh.
and you're working out and you see, okay, I'm not getting any result, and you are not going to blame the gym.
Yeah.
Because I went to a gym for a month and I did not get good biceps, I did not get good triceps. You have to stick to the gym at least for a year to see the results. So when I give a monthly subscription, I can make a lot of money, because monthly subscription costs less, but users won't stick to it. Doesn't help the users. They have to stick to at least for a year to see the results. So that is why I always say monthly subscription doesn't work well when you're selling services based on markets or performance oriented.
Right.
It has to be a yearly subscription. So only people who get committed to a yearly subscription, they would definitely see a result. Otherwise they can't see. It wouldn't help. So that is when people will say, okay, algo trading is not making money, and they'll jump from one system to other system.
Okay, fair. I would actually want to see. I'll check it out. Scare off. I'll check it out how it
Sure,
works.
sure.
I have
Sure,
I
sure.
have a lot of Demat accounts, so I should be able to see through some of these.
Sure.
Fair enough. Algo trading. I mean, we're done with the interview, but algo trading is something I would want to have a separate discussion if possible. Few months, probably, or few weeks from here, with you.
Right. Sure.
All right. Thank you so much, Kiru, again for this. Really informative.
Thank you, Asim. Thank you so much for spending so much of time listening to all my
No,
stories.
that was amazing.
No,
I learned quite a lot, man. Right from that Milo story to the third guy. I still forgot the name of the third guy. Warren Buffett.
Rick.
But I've heard this. I heard about Rick before, but again, I tend to forget the name. But anyway, thank you so much, Kiru, and take care, man.
Thank you,
Take
Asim.
care.